Hey traders, welcome to this week's episode of Traders Trade for the week of November 2nd to November 6th. This is episode 11, and I'm your host, Dan. Let's recap last week. We had a scary week, right? A prelude to happy Halloweens. The market was down across the board, and that was due to a lot of uncertainties that's coming next next week from the election, and it looks like we have a new COVID wave, especially in the European countries, which are shutting down again. And we do have some states in the US that are spiking. Earnings overall was a beat across the board, but the market didn't care. A lot of the companies were reporting a beat, but the market still sold off on them. For economic reports, we have building permits at 1.55 million, existing home sales 6.54 millions, and overall earnings and economic numbers were looking good. So it was very unfortunate to see the carnage last week, but again, I've been warning you guys about volatility for the past few weeks. Just a lot of uncertainties right now, especially from the election, and especially from a contested election. The market would not like that. So just be on your toes. For the S&P 500 last week, so we broke below the 50-day moving average. We also broke below this support. The support from the June high did hold, and that was also the support back in September. So that held. If not, we have the 200-day moving average. And if you remember a few weeks ago, I talked about looking at the S&P 500 when we look at the weekly chart, how far the price is away from the 200-day weekly average. It's the divergence or the deviation is just too great, where I felt the market needs to go down to at least 3,200 or 3,160, which is where the 50-day weekly average is, in order for us to move up. Otherwise, we're just too frothy to be moving up at this level. Dow Jones Industrial broke below the support, broke below all the moving averages, including the 200-day moving average. So that was a big drop last week. Right now, if you want to look for support, it would be the June low right here. Dow Jones Transportation was a strong index until last week. That it was also a victim from last week's carnage, broke below the 50-day moving average, broke below the pre-COVID high. It was in this triangle here, nearing the apex, where it had to decide what it was going to do, and unfortunately it broke below it. So now the pre-COVID high along with the 50-day moving average are going to be acting as resistance. The Nasdaq clawed its way back up to this resistance from the old support, and from there it just tanked all the way below the 50-day moving average, and now we have this downward trend line acting as resistance. The Russell 2000, similarly to the Dow Jones Transportation, was looking good, but unfortunately it was also a victim of last week's carnage. So it broke below the high in August and September. It did close at the June high, but now we are below the 50-day moving average. In summary, everything is looking bearish right now, especially the Dow Jones Industrial. And please note, guys, that this is a summary of last week's price action. This does not speak on what's going to happen this week, right? Just letting you know, based on last week's action, what does the chart tell us? That's why you would notice some of the weekly summaries for the markets, it will say bearish and then the market will go up, or say bullish and the market will go down. So this is a summary of last week's action, right? It doesn't say what's going to happen next week, right? So keep that in mind. Onto the sectors. Materials broke below this support, broke below the 50-day moving average. It did close above the pre-COVID high. Energy looks like it has bottomed. That's my opinion. But, energy is just so beaten down that seems like it has no floor. But it looks like it's hovering right now at the top of this triangle, and it looks like it wants to go back up. But again, we don't know. It's just right now there's just no love for energy at the moment, so it can continue to go down lower. We don't know. This is a sector that I would not short just because it has been beaten down so much. I feel like it's just oversold at this moment. Financials is in this symmetrical triangle. You can sell options around it if you think it's going to continue in this range, or if you think it's going to bounce back up from here, then you can go long. Industrials broke below this support, broke below the 50-day moving average, and right now it's just a little bit above the 200-day moving average. Technology was able to close at the September low, and that's holding up. But we'll see if it's gonna gravitate towards the 200-day moving average. Consumer staples broke below this strong trend line. If you notice here, it's been hit a few times. 1, 2, 3, 4, 5, 6, 7 times, and it broke below it. So that is pretty significant. It was able to close above the 200-day moving average, but now this trend line is going to be acting as a strong resistance. Consumer discretionary was able to close above the September low, but the 50-day moving average is going to be acting as resistance and this down trend line. Real estate is also in a range similar to financials. Again, you can sell options around it if you think it's going to stay in this range. And if you want to do a range bound trade, if you think it's going to bounce back up, then you can start going long from here. Utilities is a sector that I would like to go long on just because it was in this triangle and it broke above it. Now, the 50-day moving average is going to be acting as support. If not, we have the 200-day moving average along with the trend line, which was the old resistance, now acting as support. So when you see a convergence of multiple support, there's usually a strong support. Healthcare was in this channel. It broke below it last week and also below all the moving averages. And it was, and unfortunately, it closed slightly below the 200 moving average. So that's bearish. Communications was in this channel. You notice back in August, September, it broke above it, but that was a failed breakout because it fell right back into it. Now we close below it. So maybe we will, from here, possibly go further down. We do have the pre-COVID and the September low acting as support. So it held up before, and we'll see if it can hold up again. So in summary for the sectors, utilities is the only one that's looking bullish. Sorry, I meant here neutral to bullish, not completely bullish yet. Everything else is looking bearish. I would say very bearish for energy and healthcare. Again, energy is something I would not short at the moment. Over here is what I have for what I would go long on, what I'll be neutral on, what I would look for short on. So in the utilities, I'll look for some strong stocks to go long on. Energy, I have in a neutral spot just because it's so oversold. I don't think there's much meat left. I rather look for something that's overvalued and hitting resistance and shorting that, like in technology. Okay, for educational content this week, this is from Fundstrat. So far, 64% of companies in the S&P 500 have reported, and 86% of them beat their earnings. And they beat it by 21%. So that's good. That was expected. But year over year, due to COVID, it is 8% below last year. And for the companies that are still that still need to report, estimating to be below by 20%. And and that's due to COVID, and this is expected. But of course, don't don't count out the human spirit, the need for profitability, right? That's what gave us the 86% of the companies beating, and a surprise beat by 21%. Last week was a very busy week for earnings, and also this week. Last week we had 183 companies reporting. This week we also have another 129 reporting this week. And based on the companies that reported so far, this is from Beth Kindig on Twitter. Looking at revenue growth, the companies that had just phenomenal revenue growth and how much they beat consensus by. So Snap right now is the top because this is ranked by how much they beat consensus by. So these are stocks that I would look to go long on when they pull back. Events this week, again, another heavy earnings week. A lot to watch out for. For events this week, it's another big uncertain week due to the election on Tuesday. The worst case scenario is if the election is contested, if it's too close and one of the candidate does not want to concede, we're going to have a contested election, and the market would not like that. That's the worst case scenario. So be prepared for that. And also possible riots if President Trump wins. And of course, COVID continues to be in the background with a possible wave 3 due to winter. Economic reports will be overshadowed by the election this week. We do have the FOMC meeting on Thursday. In conclusion, this week is going to be volatile, especially from the election on Tuesday. You should have a plan on what's going on, the results from the election. So you should have a plan on what happened if Biden wins, if Trump wins, and if we have a contested election, okay? And if you have no idea what's going to happen, and if it's just too volatile for you, sit on cash, just sit on the sidelines and just let the market sort things out, right? You don't need to be traded, especially for such a volatile week. And the other thing you can do is, if you're expecting volatility, is you can look into trading the VIX, right? If you think volatility is going to spike, then you would buy some of the VIX options or calls, right? Okay, everybody, this is going to be a wild week, but happy trading. Take care, and I'll see you guys next week.